How real is this threat?
Yeah, I think, to be honest, it's a very good possibility that it will happen. A lot will really depend on US yields. Now, obviously, they came lower yesterday because of a weaker than expected ISM data. But I think certainly going forward, you had Fed Williams come out very quickly and said, OK, we're not done tightening yet. If the inflation data next week comes in stronger than expected, or even payrolls later this week, I think you'll see yields push higher again, particularly if Fed rhetoric remains very hawkish. They'll put pressure on that yield interest rate differential. You're more likely to see dollar yen go above 145, and the market's very wary of 145 to 146 of Ministry of Finance intervening again if it wishes to.
Tell me here as well, David, of course, we've seen what the oil price has been doing. It's been lurching low, apart from the bump up we've had in the last 24 hours or 48 hours or thereabouts. And now, Japan, of course, is a major energy importer. This is going to play out in its FX as well.
Yeah, it's not a positive for them because they said they are big importers. So rising oil prices hurts their current account deficit, which is another factor that weighs on it. So those two things combined are big. The bigger driver near term really does tend to be the interest rate differentials. So I think that's what the market is more focused on. As I said, at least as far as the Ministry of Finance is concerned, there'll be a bit of relief that US yields came off yesterday, taking a bit of pressure on dollar yen. But that can change very quickly, particularly with US payrolls report on Friday. If that comes in strong, I think yields push higher and dollar yen comes back under pressure.
David, cable's back above 113. We're done. Problem solved.
If only it was done.
We've just gone below that, actually.
Two things going on. Well, there's two things at the moment. Obviously, you saw some dollar weakness overnight that helped support cable. Again, that could be reverted quite quickly. Obviously, there's a positiveness about U-turn on the 45 basis points income tax reduction. That's going to be scrapped. But even having said that, there's still going to be a lot of borrowing by the UK government at the moment. And the market is still going, how are you going to fund that? So the market really wants to see that. And the market's going to say, with that, your BOV still going to hike rates high. If it doesn't hike rates as high as they expect, there's going to be pressure on sterling. So you've got a near-term, a bit of a relief rally. But the big fundamental problem of this government still borrowing too much money and a twin deficit and a budget deficit are not positive for sterling. So risk still biased towards the downside in the near term.